You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family, I have an interesting one today. So building on some of the older episodes with Hunter Jones, most recently with Create Tailwind and David Zapata, we were talking about infinite banking strategies and how to use properly designed whole life insurance policies to effectively store your wealth and then later be able to take a line of credit against that to buy assets. Well, if we add a layer on top of that, there's a concept called vortex banking. A company called Infinite Wealth Strategy, IWS for short, has coined using a very talented CPA and attorney. And basically they wrap a trust that has about 5 names. I'll let Sally Marie here in just a moment explain it to you. They wrap a trust around it, and all of a sudden the trust owns the whole life insurance policy. The trust is exempt from capital gains tax. Ding, ding, ding. That's a magic word for us real estate investors. Let's get on this podcast and let's learn more and see if this can help us out. Here we go. All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton. We are powered by Quattro Capital as per usual, and I'm joined today with Sally Marie Gimon with Infinite Wealth Strategy. So IWS as a company specializes in a unique form of infinite banking, who we've had a couple of guests on the show talking about this as a concept to grow your wealth and really give your dollar 2 jobs. We'll really talk about, from Sally's perspective, what the infinite banking concept really is. But she's been on a quest for over 30 years to find an infinite banking whole life insurance policy that she can actually afford without paying $50,000 a year. So if that sounds intriguing to you, hang on tight. Here we go into this. Sally, welcome to the show. How are you doing today?
I'm doing well. Thank you, Chad. Just to give you a bit about the 30 years, I was a resident assistant at University of Maryland on a football Saturday, and one of our students was in trouble. So I had to take her to the hospital. When they pumped her stomach, she said in the heel of her Doc Martens, she had a business card with 2 quarters, 1989, so before cell phones. I called her quote unquote handler, and he showed up in 45 minutes and said, forget what you're studying at school, become an insurance agent and get an infinite banking policy. So I found them $50,000 a year, $20,000 a year, but I hope y'all can afford it. I couldn't do that until I found Infinite Wealth Strategies. You can start as little as $500 a month or a lump sum of $6,000. And back in November of 2021, Bankrate said 80% of Americans have $90,000 in debt and are not saving for retirement. So with this policy, you can solve both problems very easily.
It's very interesting. So I love to get into what infinite banking is from your perspective as well. But first, tell us a little bit about yourself. And let's hear who Sally is and kind of what got you into the space.
I have been an insurance agent since 2004. I have been a full-time real estate agent since 2019. And my let's call him the guy I respect for notes brought in somebody to talk about infinite banking and Infinite Wealth Strategies, and I'm like, I'm licensed, let me do this. And they're very excited because real estate investors love the idea of insuring their money. For as much as you insure your house or your car, you're still making compounded interest rate and dividends, making your money work hard for you.
I love the way you just said that. You're insuring your money, right? So let's segue from that into, tell us in your own words, what is the infinite banking strategy before we go and add the layer that your company puts on it?
Infinite banking has been around for 179 years. People like Walt Disney used a loan to buy the land in Disneyland. Currently, President Joe Biden has 6 policies. I assume 3 for him and 3 for First Lady Jill Biden. Doris Chapman, the woman who started Pampered Chef, I'm sure all the ladies out there have the stone pizza grinder. She took a $20,000 loan from her policy to start it in her basement, and unfortunately sold it for only $6 million to Berkshire Hathaway, and that all went back into her policy tax-free. So it's a powerful thing to work with.
It's pretty fantastic. So in a nutshell, the idea as to what you put money into this specially designed policy and you're able to loan against it?
Correct. The first few years are a little bit hard. Starting your first year is usually about 62%. So you put $500 in per month, you get about $320 back out. By the fourth or fifth year, you put $500 in a month, you get $505 and $530, $560. I have one student or one client who's 21 years old. By the time he's 50, he puts $500 in, he'll take out over $5,000 a month. He's going to retire to Mexico, drink beer on the beach, and watch the ladies walk by in bathing suits, is what he says. So
that's not bad. So you put in $500, you get 10x that out. So that's kind of, they're kind of front loaded, right? And then
correct.
Eventually you get to where you put in $1, you get 5, you put in $1, you get 10. So you really start to get the value of the growth rate from that.
The growth rate, correct. It's you have contracted compounded interest rate and dividends. Worst case scenario, you never pay back your loans. You don't have to. Worst case scenario, you get hit by lightning. The insurance company will get paid back. Don't worry about that. And so the rest of the money, they'll never be, your death benefit will still go to your heirs tax free. So the insurance company will, it's the house, they always make money. So people are concerned about that a lot. I'm like, don't worry about the insurance company.
Sure. And so it really is, an insurance policy at the root of it, but the idea is you're really treating this like a long-term savings account. It sounds like you're putting your wealth into it.
Your cash value. You're using your cash value. First off, pay off your debt. We do 2 free mapping sessions a year or more if you need it, to show you like, hey, pay off this Target card that's at 23%. Pay off this Visa card that's at 11%. One thing I would tell your audience, if they want to find out a little bit more about this, it's called BOLI, BOLI, that's bank-owned life insurance. The banks are putting in $1.3 million, $1.3 trillion a year into these policies, but they don't tell, Bank of America doesn't tell you what they're doing, or Wells Fargo or anybody else. So this is my quest, is to get the word out to as many people as possible.
Very interesting. Okay. So, and folks, you can go back and look at David Zapata's episode earlier and Hunter Jones as well. We did a lot of in-depth analysis on what is the infinite banking strategy altogether. So if we assume we've listened to those episodes and we kind of, are tracking with what Sally and I are saying here, your company adds another layer onto this and adds some further efficiency. So why don't you next explain this concept of a trust with us and what this trust is and why it's important. And then we'll talk about putting A and B together and the magic that happens.
Okay, thank you. The trust is a very special trust. The title of it's 5 words, so I'll say it twice. It's a non-grantor, irrevocable, complex, discretionary spendthrift trust. Most people, my father included, had a trust for the not go through probate, but we still had to pay taxes on everything. This trust has been around for over 400 years. It's based on, if you go back to the Magna Carta back in England, if people know the office based on the Rockefellers, where it goes from generation to generation, this is what we're talking about. You start with one family and it goes from the person who starts it to the children, to the grandchildren and grandchildren. When the trust owns the policy, it can multiply so quickly. One of my clients started her infinite banking policy in the trust and is able to put over, if she wants to, up to $7 million a year into her infinite banking policy and make it just explode huge. Also with the trust, because it's written in the 600 level, like my dad's, when he passed away, his trust was a revocable trust, so it was down here in the 300 level. At the 600 level, it defers capital gains into infinity. So I was telling you a story that I bought a $20,000 bank-owned property in Nash County, North Carolina during COVID, had to sit on it for 18 months, turned around, I took it to auction in 2021, sold it for $64,000. Capital gains is on that $44,000, and that on average is 32.8%. So the trust let me save over $14,000, almost $15,000 just on that one land deal, and it'll keep paying off over and over again. At the end of this month, I'm wholesaling 2 houses I have here in Charlotte area, which hopefully I'm going to be making probably about probably about $49,000 on both wholesale deals. All of that will be completely tax-free for me, or deferred taxes for me.
Okay. And you're the expert here. So folks, we're going to give her contact information. You're going to have questions on this. I'm going to
Yes.
ask some now, but so effectively, and let's compress it down to trust for simplicity's sake. The 5-letter trust we just talked about, it basically, it's an entity, right? It's a living,
Yes.
breathing entity that the IRS recognizes as a taxpayer, and it's exempt from certain levels of capital gains tax, it sounds like. So the idea is the entity owns the whole life insurance policy. I guess that's
The
where we're
entity
going
owns
next.
the whole life insurance policy, and then also, like this piece of land I had, I did a quick claim deed from my LLC into myself, and then got that notarized, and then myself to the trust. And so instead of paying taxes on it, I sent all the paperwork to my attorneys, and they just asked for the first 2 pages of the trust, and everything got deferred that way.
Okay.
With the when the trust owns the infinite banking policy, you can put more money into it. Right now, it's paying 3.5% capital gain. 3.5 compounded interest rate, and for the past 2 years, they have given 6.2% dividends. So your money's growing and being insured. So if you go into cryptocurrency, if you're doing forex trading, I'm a real estate investor. I deal with notes, the mortgages on homes, and I do tax liens and tax deeds. My money's insured, but I'm also doing money lending from the extra money I have in my trust. Only thing the trust does not cover are your 3 F's, your food, your fun, and fashion. But quite honestly, that's okay. My real estate's the part that, making $49,000 profit in a few weeks and thinking about how much that's going to be. Let me just do quick math if you don't mind.
Yeah.
So I'm doing simple math. 49,000 times 0.328. I'm going to save over $16,000 on my 2 wholesale deals that I'm dealing with. Unfortunately, the state of California and New York have state capital gains. I have to say, talk to your CPA on that. I'm an insurance agent, not a CPA, but saving an extra $16,000 because I've done 2 good deals. That means a lot of money to me. I mean, that's a salary for some people per year.
That's very good. And honestly, I have to apologize. I jumped the gun, audience. I'm bad at doing this, right? So if I step back a little bit, we were talking about the trust, and kind of this is a thing that can buy and sell other things and be exempt from capital gains.
Correct.
So take that wrapper and take it over here. And now, Sally, what we just kind of dove into, and we didn't even give credence that the audience hadn't heard us talk about the vortex banking concept yet that we were talking about before.
Correct.
So explain the combination of the infinite banking concept that is the specially designed whole life policy with this trust that is a wrapper that is exempt from capital gains tax. So how do those go together, and how does that create the vortex?
Great question. The reason it's called vortex, it's what we coined it as. The trust is owning the infinite banking policy. So unfortunately, the federal government gets their pretty little hands into everything. So if you and somebody else, exact same age, exact same height and weight, exact everything else, you're in real estate and he's working in food industry, the federal government decides how much you're insured for. That's called the modified endowment contract line. So with that, they say you can't insure yourself extra. When the trust, like its own entity, just like your LLC has an EIN number, the trust has one. When the trust owns the policy, that goes out. There's no MEC line to worry about. So you can put as much money as you want into the policy and make it grow more and more, borrow against it. And then the most important thing, leave a legacy to your family, complete tax, because it's whole life, it's completely tax-free to your family in 50, 60 years when you pass away.
Sorry,
You just went quiet. Sorry.
I was muted. Guys, edit that out for me. The editors will fix that. 1, 2. So effectively what we've done here is we have wrapped the trust around the whole life insurance policy. So that's kind of created a taxable vortex like you're talking about, or a vortex of your banking system.
Exactly.
So qualifying questions. does this trust behave as a retirement account would, or something, to where it's tax deferred, but money is like, can I pull money out of the trust, and tax free as well? And let's say I am going to be a full-time real estate investor. Let's say I set up the trust with my whole life insurance policy. I put some cash into it to fund it, over time. And I get to the point where I have enough in there that I can go do your real estate transaction you just spoke of. Could I then distribute out of the trust, let's say $30,000, and live off of it, or reinvest it somewhere else, or something like that? Is there a taxable hit for doing that?
Correct. The only thing you're going to get taxed for is when you do a draw on the trust for your food, fun, and fashion.
Okay.
Right now, I'm making money from different streams of income. I don't have to worry about that. Josh Nelson, our CEO of the company, talks about it every month. He does a draw for $2,000 that is taxable. That for him and his family, you're going to the grocery store to buy food or something like that. And he says he doesn't have to write it down that I just spent $2 on a Slurpee. I didn't just spend $52 at the grocery store. So he's doing a draw like that. For the real estate, I'm putting money into my policy, but my policy is not at the more than 100%. So when I just sold that property, I paid off my policy for the year, and then I'm putting as much money into the policy as possible, but I'm leaving extra money in case I do need to go to the grocery store or do something like that. But the trust owns my car. I needed to get 2 new tires. Unfortunately, I ran over nails. Since the trust owned my car, the trust paid for the 2 new tires. So, as long as it's not my food, fun, and fashion. When I was just in out west at my nationals for my real estate group, all that food got covered because I'm traveling and taking people out to dinner and things like that. So that's covered. Sort of like what we do with our LLCs. But the neat thing is,
you treat it like a business.
With the trust, you no longer. Correct. Your business. So you don't need it to have LLCs anymore. You don't have to worry about 1031 exchanges. One of my clients, that's all he does is switching every 90 days. He's got the trust because he said it's a huge worry for him if a transaction doesn't go through. The only LLC I still have is I self-direct my own IRAs. I will keep that LLC, but I shut down 3 other LLCs. I transitioned the properties in them to own by the trust, so I didn't have to do K1s this year.
Interesting. So this could wind up being a replacement to your personal investment LLC that you may be using, right?
Perfect. Exactly.
Very interesting. Okay, and so you said something that I'll repeat again because I didn't catch it before. The anything can run through the trust: purchase of an asset, purchase of a vehicle, purchase of business related things, depending what your business is. Or what that trust is conducting as its occupation, so to speak. But you cannot pay for your personal food, you cannot pay for your personal fun, and you cannot pay for your clothes, right? So you have to distribute and take a taxable distribution from that.
Correct. So
okay.
Again, Josh Nelson just takes $2,000 out every year. The one other thing, just to be clear on this, the trust does not cover is if you have a W-2. One of my clients, great guy. He is a school teacher. He teaches wrestling. He's got 3 more years until he gets his pension, but he wholesaled 6 properties last year. His wholesale deal all got covered, but his W-2 income cannot be covered by the trust, unfortunately.
That makes sense. Unfortunately, the government always gets their hands on the W-2 income. That is the most inefficient way.
If I don't know when this will be done, but there was an article on MSN when you signed in this morning about how they're going after a gentleman in New York who has art collections. So the situation is that he bought the art and it's appraised so much more. They want to charge him for the appraisal. He doesn't pay anything until he sells it. That's the capital gains. If this gentleman has his trust, they would never know he owns these pieces of the artwork or the sculptures. Your trust would buy it, and it because it's a non-grantor, nobody can know what you have. So one of my clients, he has 100 doors in Chicago. He still keeps a liability on each property. So if you visit him and you slip on ice and break your ankle, there's still liability. But when the attorney goes to try to sue against all his other properties, he only knows about this one property. He doesn't know the 99 other properties he has.
That's good. So the one trust, you really don't even have to segregate assets. It has a
Correct.
certain level of anonymity and protection
Correct.
from creditors and things of that sort. So that's really powerful as well.
And I have not done a 1031 exchange because I deal with, I'm a horrible rehabber. I can't hammer a nail straight. So that's why I'm in notes and tax deeds. But I had 2021 taxes. I had 5 LLCs I had to do K1s for. It doesn't sound like a lot, but my CPA charged me $135 per K1s. This year, I just had the one K1 for my self-directed IRA. So I
Very
saved
nice.
money.
Okay. Yeah, that's great. Okay. Well, this is we've kind of touched on the surface of this, but I think everyone listening to this, including me, probably have some questions on, does this apply to me? Does my situation work? What if this, what if that? So how can we get in touch with you and your company and set up one of these strategy sessions you talked about and figure out, hey, does this strategy, is this the highest and best use of my money, in what I'm doing in my life?
Perfect. To make an appointment, my calendar link is learn, LEARN, learnwithsallymarie.com. My website to find out more information. For infinite banking, there's a great graph on the website. It's Sally, period, live, LIVE, and then the initials I for infinite, W for wealth, S for strategy.com to see, hey, if you can have both. You can have the trust, you can have the vortex banking, or you can just have the infinite banking and the trust. You don't have to have them together at all. There's information on both of those things there. If someone would like to have our CPA, Richard Stenson, who does the trust, has a PDF of his 37 top questions, I can send that out to you, because seriously, you should know exactly where your money's going and have all your questions answered for you. So
this has been fantastic. And folks, as always, those items will be in the show notes. So just scroll right down to this episode. You don't have to write this down as she's saying it. But yeah, that's really fantastic. So this is a unique, I love that we're building on this, because we've had, 2 other episodes trying to explain the infinite banking concept. And I think people are getting their head around it. I'm using it, it's a fantastic.
Oh, good for you. So few people have heard of it. So I'm very good for you.
Yeah. It's becoming very, very prominent in the real estate space, but this concept of wrapping a trust around it that you guys have kind of coined is very new as well. So it seems like there's another level of efficiency if you run it in that way. So fantastic. Well,
just to give you a quick story, one of my agents who's under me lives in Hawaii, was flying over from Hawaii to our meeting in Utah. She sold 7 trusts on one flight. She's like, here's my business card, here's my business card, here's my, and because everyone's trying to save money. I mean, I still pay gas tax, I still pay food tax, I still pay, when I was at the hotel paying hotel tax. But just because I'm a smart investor, maybe I don't want to pay all this money, 32.8% to the federal government. I'll put it towards charity, things like that. But I want to decide where my money goes.
Absolutely. And the beautiful thing about being an investor, folks, is, when you're investing in property or things that create jobs, you may be a small business or something like that. The government tends to treat you well when you do things they can't do very well, create jobs and create housing. Okay.
Correct.
So that's why we have tax breaks as real estate investors in form of depreciation. And now this trust idea, if you're buying assets that are useful, sometimes that's the way you get treated. So fantastic. Well, Sally, before I let you go, I've got to ask you a couple of questions that I get every person on this show with. So what is your superpower as it relates to this business?
My superpower is doing due diligence on properties. For my real estate, my superpower for working with infinite banking and the trust is talking to people.
Both very valuable. I mean, I think getting someone to understand infinite banking in its entirety is difficult. And then once the light bulb goes off, and if you're one of those people that can help people get to that point, God bless you, because it's really tough. But yeah, this can really change people's lives when they figure out how to use it properly. and due diligence, two of the most important words in the world of real estate. So fantastic
Oh,
there.
yes.
All right.
I bought, we've looked at some notes that are not so good. So
Yeah,
unfortunately.
yeah, absolutely. All right. So we've heard a lot of really cool things about you today, Sally, but what is your biggest failure in life or in business? And what did it teach you?
My biggest failure, not my cause, but honest to God, um, COVID shut the courts down. All of a sudden, we were 17 hours away on it was in Tennessee, so it was a forfeiture foreclosing on someone who hadn't paid for 19 months, and they got to live another 18 months rent free. So I hate to say it's a failure, but COVID affected people. You know, I unfortunately lost my dad because of COVID, but in my real estate investing, 20 months of not being able to follow through on things really hurt at times for me. So that's why I had to come up with other streams of income.
I hear you. I think a lot of us felt some of those pressures along the way, both on the health side, sadly, and on the investing side. But we live
Correct.
to tell the tale, so we must have structured properly, right?
Exactly.
Fantastic. Well, I think from a perspective of learning this stuff, you have a free gift you'd like to offer the audience. Where can they find that, and what is it?
Um, as I was talking about the free, my different streams of income, I was going to say when you go to learnwithsallymarie.com, some simple things. There's a gift giving tree that a friend of mine introduced me to. A quick story on that. My father passed away in November of 2020. I knew things were moving for him, but when I shut down his account, there was $56,000 in his account from the gift giving tree. I'm like, wow, that's, that was kind of nice. So there's ways to make income. If people should learn how to make income for themselves, if that makes sense. So that free gift is available at learnwithsallymarie.com. And then you can always set up an appointment, a Zoom call with me, and I will go over the trust and infinite banking and answer any questions anyone has.
Fantastic, Sally. And last thing, but certainly not least, one of Quattro's 4 pillars is indeed philanthropy. What philanthropic ventures, rather, can our audience support on your behalf?
I love this because when I filled out the paperwork, every time I sell a trust, I give a gift to St. Mary's Food Bank. It is the oldest food bank in the country. It's based in Phoenix, Arizona. True story. My mom was from Ireland. My grandfather died in December of 1939, and my mom had serious food. I hate to say it, but she was a food hoarder, and she never wanted to be hungry again. So I don't think anybody in America should ever go hungry. So I still, even though I moved to North Carolina, I still support St. Mary's Food Bank back in Phoenix.
I love that. And I think a lot of our listeners will too. That it's probably close to home for a lot of people during some of the times we've had in the last couple of years. So thank you very much for that. All right, everyone. Well, this has been another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton. Until next time, over and out.
Thank you, Chad. Take care.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway podcast.